Hello, hello, hello. Happy Thursday, everyone. How is everyone doing this morning? All right. Good morning, Sterling. Sterling in with all the reports released this morning. Earnings, Sterling putting up everything. So, thank you very much, Sterling. Good morning, Patrick. All right. Good morning, Jacob. I have to scroll through all of Sterling's hard work to find Jacob down there, and everybody, we got people hiding in the background. Come on, come on, let's jump in on the chat. There we go. Hey Eric, how you doing? Is it too late to trigger the double and the percent beat buy on the IWM 4-hour with the Russell? Could you share the parameters for doubles? Which parameters don't you know by now? Let me know which parameters you don't know. Maybe we should do on another holiday. We'll have to do a doubles 1, 2. We'll have to look at some of that. Stuff's already run pretty far. The IWM, which is the Russell ETF, the Russell's up 1.3%. So if you didn't trade remember the break of that high, if you're trying to get in stuff on a early, then you have to trade patterns around the break of the high, especially if with reports coming out or things like Fed days. You have to trade going into knowing that watching short-term patterns around that key level. Otherwise, it can run. Now, if it were to close real weak and still trigger, you could get some follow-through tomorrow. But if it runs too far away, I'd just be looking, if it continues strong throughout the morning, I'd be just looking for pullback rotation zone entry patterns. Good morning, Options 22. Good morning, Anissa. So if you didn't see what Sterling put in, I think you covered everything. Big things, GDP growth. This is still the fourth quarter. Now remember, the third quarter was 4.9, so this is coming in at 3.3, but the consensus was 2%. So coming down, yes, but this would be 2 quarters of pretty decent growth still. I think it's being really juiced by the huge deficit spending and everything else. But the numbers are what the numbers are. So those numbers are decent. We also had durable goods ex transport coming in higher than consensus. The headline durable goods order coming in roughly flat. I saw forecasts around 0 though, so I think that was roughly coming in line. Jobless claims, slight little bounce from last time and higher than forecast, but nothing way out of the realm of, up a bit, but nothing horrible with that. What else do we have? You have durable goods orders ex defense up. Core PCE prices. Now, this is the quarterly core PCE prices for Q4, not the PCE numbers that are coming out tomorrow. Remember, we still have those, but those coming in at 2%. The headline PCE numbers for the quarter, forecast 2.2 coming in better at 1.7%. So decent numbers out this morning, but I don't think this warrants. I think FedWatch still has 6 rate cuts priced in. With stuff would literally have to fall off a cliff. I don't think you'd want 6 rate cuts because that would mean something fell off a cliff, like drastically. What else we have coming out? 10 a.m. we have the Kansas City Fed composite manufacturing. You got new home sales at 9, but really all the data's come out already. Now tomorrow we have PCEs for December. Okay, so that's coming out 7:30. Now that's just for the month of December, which gives the shorter term, and these are more important because it's giving the shorter term trend, whereas this is a whole quarter's worth. So keep that in mind. So far this morning, chips still chugging along. Nothing's stopping the chips just yet. We got Intel earnings after the close. Also remember, mega caps are up, except for Tesla, which I thought the earnings, I don't know if you're still pushing the growth narrative, how you're going to defend this one. It'll probably get a bounce at some point, but it's back. Remember, the huge double never got invalidated. Healthcare also turning lower. Oil starting to get some, energy stocks starting to get some some traction again. Keep an eye on that. So far, the groups, technology and comm services and energy leading higher. Consumer cyclical and healthcare are lagging. Fed watch. Let's just refresh this once more. Let's do a good old refresh. Remember, 6 days, 4 hours until the Fed meeting. That's next Wednesday. So going in after all these numbers out this morning, it's pause, pause. So January and March are pauses, then 6 cuts. Every meeting a cut after that. So either stuff's going to have to fall off a cliff or that's going to have to change. And we're back to extreme greed mode. Coco, we're in extreme greed. Where are you, buddy? So, are we done yet? Big thing yesterday was Tesla, which is going to be the big gap down this morning. American Airlines, I saw Sterling put that in this morning, was a slight gap up last time I checked. Intel and Visa are the biggies today. Intel and Visa. Also, Visa trading against a very key harmonic cluster. So we'll have to see how that works out. And then tomorrow, American Express. All right. Hello, U.S. economy is a juggernaut. Christoph, thank you for tuning in. Good morning, Martinez. Good morning, Legion Reaver. Is by far the best performing major economy, isn't it? Yeah, I believe so for the majors, yes. Yeah, we've bounced. Hey, William, I was just talking about you the other day in Boeing, and now you show up? Thank you, William. I asked, was it just yesterday or the day before? I said, who? Because I forgot it was you, William. I said, who was always asking about Boeing? And then who mentioned in the chat? I'm sorry. Somebody said, that's William. And I said, where's William been? And William then magically shows up. Magically shows up. All right. Good morning, Heinrich. Well, thank you, everyone. Sorry to get sidetracked there. So we had the sell-off yesterday afternoon. We had there are some fantastic doubles yesterday. That little double traded in the morning. I'll just show you exactly. This was wonderful on the S&P. A little spike down, hitting all the targets. And then I'm just showing it on the 15-minute. And then you had the double. This was a still qualified double. Little bounce, even if you went with the aggressive targets with the big momentum. You know, you spike, little bounce. And then this is where, on anything that continues to trend, this is where I watch for rotation zone entries. So let's say you miss something on a percent beat breakout or a double, or it gets to target and then it keeps going. I watch for the retracement entries, especially if we get momentum, which we had yesterday afternoon to the downside. I watch for retracement entries on the 5 and 15 minute. So you see here, little trigger, bounce up, rotation zone on the 5, rotating back down, bounce up between in the rotation zone, move down in the rotation zone. So I watch that on the 5, and then I watch especially the 8 spiking above the 8 on the 15. Okay? But those kind of things, if you get momentum to the upside, you can start watching the same kind of things. Now, this was already a sideways correction going into the open. So remember, this was not a pullback. It was letting the 8 catch up on the 5-minute and breaking out. The key levels, just give another thing what I was watching after the breakout with the report coming. On any shorter term breakout, the first key target area was where I drew the harmonics from yesterday's high to the low into the cash close yesterday. And then we had a nice little base built. We broke out with the area. So the key targets, the first key target, I was looking at 49.11, then 49.16. Now I'm going to be watching this to see where we close going in the open about, with 49.16. If it just keeps chugging along, we get momentum and we keep holding above the 62.5, well, then 49.22, 49 roughly 28, and then the return to the highs above the highs, and this is not just for today, but for tomorrow, above yesterday's highs, which were, 49.33.25 area, 49.40, technically 49.40.25. Then we have a major cluster, a double cluster. We have the longer term harmonics. You see, those are the wider ones, and the shorter term harmonics prior to the run up yesterday. That's giving us a 49.40 and the 49.47.25, 49.47.50. So those are the breakout levels higher. Okay. On any pullback, if this gives it up into the open, the key support is back to where it broke out. The first early warning sign is if we start closing back below the 5-minute rotation zone. And then I'd be watching this 49.04 and then 4900 and then about 48.95 would be my key levels lower. If we were to break down below yesterday's low, for any reason, this is where you prep both ways, 48.75 area, 48 about 70 to 48.75 is the first key area of support, and then going into longer term support, we're all the way back at 48.35. You've been busy with work. Well, maybe that's a good thing. Hey, Chris Plummer, thank you. All right. Going to backtest correlation at end of day doubles and percent B to earnest. You mean early morning futures? I don't know what earnest morning. So that's exactly what I'm watching. Also, keep an eye on this. We're not quite to double territory. Double, that would be double top. That does not mean it ever has to trigger, but if this does get back above that 75% harmonic, which is the minimum qualifier for a double, and then we were to get the close on the 4-hour basis, remember you can always front run or trade the breakdown, but if it doesn't follow through with the close, there's no carrying it because it's not officially triggered. Then you reverse below 48.89, you'd be looking for the double targets lower, the 50, the 75, and the 100% projections. Just remind me in a bit. So that's what I'm looking for. Same thing with the Nasdaq. I'm not going to review everything I just went, but the first target on the breakout was the 17,681. Remember, targets are used not only for taking profits, but moving stops, especially moving up stops. Next target, 17,709.50. Still going to be watching this to see if we sustain a close above it. We're poking above it right now. What would qualify the double on the Nasdaq would be the 17,737.50. That does not mean you get bearish because that would require then a close back below 17,569.75. That again would be the next area. For a trailing area, you could at least raise stops. Then 17,765 and 17,793. This would also be, you can come from yesterday's low to high and go with the forward harmonics. So if it were to break out even tomorrow morning above yesterday's high, 17,841.50, and then look at this, all this cluster up here. Major top area potential cluster. Does that mean it has to stop there? No. Does that mean it even has to get there? No, but it gives us already for reward to risk and longer term stuff, we can start identifying key areas instead of just, hey, what should a target be? I don't know. There we go. 17,890, 17,889, 17,897, and slightly higher. So that's exactly how it sets up. If we pull back, same thing, 5-minute rotation zone. Sideways, we just launched up. There's no double top potential here. But if we start closing below the rotation zone, which is the blue line, then I'll start watching, and especially if we get some little pressure on the tick, then I'd be watching for a possible return to the breakout area. But my first level support would probably be around the 17,680, 681 area, and then the 17,653. The Dow has a confirmed but not triggered double. Not triggered. Okay? Now, if it rotates up again and gets back to these European open high area, it's going to turn into a triple without ever triggering. Okay? But the Dow has confirmed. What does that mean? These can't move anymore. But if it comes back up, it's now a triple. But it is not officially triggered. It needs a 4-hour, from my perspective, 4-hour close below there. Or we have to dump with momentum going in the open, and then it's then only if it follows through with the close. The Russell did trigger and not get to the first target. And if into the open, if it trades above 2007.8 or closes above 2003.1, it's over. Should you chase the percent B buy from here? There was one right here. If you're trading it, this was a percent B buy, which could have been done. Is this a percent B buy? No, not anymore. Because I would not be doing it on a 3. Don't use a 3-bar rule on the. You only use, if you're going to go long in a 1 bar, only do that on the dailies. Okay? But also remember, what was this? Can't see. I'm going to have to fix that. That was a still positive. So, unless you went with a 2-bar rule, that was back there. But the major target to watch for, now this is re-entering. Let me take off the short term. Re-entering the 50 to 62.5. The only thing that keeps me bullish still longer on the Russell, it needs to get above this 2025 area, same one I talked about. It's been rejected between the 50 and the 62.5 twice. So that's where we sit with that. VIX, little pop up yesterday with the afternoon sell-off, but we're going to keep an eye on this unless we start moving back above 1330 with selling pressure today. Notes. This is a really ugly, sloppy double, but I will keep an eye on it. See, why is it sloppy? Because of this extra hitch in it. But it would require, and I'd still want a daily close above 111 because it's the better formations on the daily, so it would need a daily close above 111.19.5. We're holding this 110.26 level. If we were to break below that, I'm not expecting that to happen today. Then we're looking for 110.16. It's easier to see. We do have, against the key resistance, the yield is 4.195. We have produced a sloppy double top. You can see it here because it's extra hitch, but it's still technically valid. And that would, if it trigger, would also take it below the daily rotation zone, probably. But, and then we'd start looking for a bigger pullback in yield. However, there's no guarantee it will trigger. If yield breaks above this 4.195, we're looking at 4.25 roughly, then 4.3 to the upside. But those are exactly what I'm watching, either to break out above 4.195, or the only thing that gets me bearish on yield is the close below 4.07. 10-2s. Still watching the key support, minus 25 basis points, key resistance, minus 8. Other than that, not much. Dollar index bounced back yesterday. We still got a widening rotation zone. Getting a little flatter, but This is actually somewhat bullish if we're working off the cycles coming down and the overbought position, and this is a sideways correction still. Sideways correction. So I'm going to be watching to see if the dollar can break higher. Not really today, unless something major happens, but going in for the next few days. Crude, here we go. Yesterday breaking up above, but we've really got a solid close above the 50 yesterday. Today, I said yesterday, I was watching with the higher lows building and putting up pressure against this. I was watching for the breakout or getting the breakout. Really watch where it closes today. The worst case is I'd want to close above 75.50. The best case is a close above roughly 76.20. Key target area, major target area is still 77.80 to about 78. And then we have to see how it reacts there. What else? Gold. Gold, this is just a mess right in here. Key, I'm still watching 2030, around 2032, 2035 for a close. But this is just a mess so far. Let's get to some other stuff. The yen a little weaker than the dollar, but major support coming in 146.22. I'm going to be watching to see if it does hold up here with the daily rotation zone. Euro still caught in consolidation opposite the dollar. So it'll be interesting to see if the euro breaks back below 108, 108.50. Spiders. So yesterday the little reversal, but today 487.34 going into the open. On any pullback, we're looking at about 486 to 486.10, and then the gap fill to 485.39. To the upside, look key off of about 487.57 to yesterday's open. 487.81 would be my first target zone. Above the high yesterday, 488.77, 489.92, and then if it keeps on running, 494.63. The Qs, again, the little reversal yesterday, 428.16. So back below this harmonic, but the only thing that I'd be looking at any rollover into the open would be 427.44. Yesterday's open, I'd start looking for some support, and then if that does not hold, the close of 425.83, and then if that were to break even tomorrow, that close, we have a gap left behind, close back down to 423.48. To the upside, yesterday's high is first 429.85, 430.56, 432.07. William wanted to look at Apple. Apple, which finished the double target. Okay. Remember, came back down. I put up this double. I forgot what day it was. Against the 200 between the 50 and the 62.5. And we were watching for that. That triggered back last Thursday. Went through all the targets, filled the gaps. Now we're going to flip this. Closed above the 62.5, took out the 75. So on the next area is 197.21, 87.5 mark, 87.5 level, and a prior key resistance shelf. So 197.21 area. If it takes out that, 190, it's roughly back to 200 potentially. The only really, if Apple loses 186.50, 186.60 would not be good. It would be to target the gap fill, the 200 area. Then if that broke, it's really not good. So that's the worst case line in the sand. Ken, what do you think of GUSH? I've never. GUSH. GUSH. Is this what you want? I've never looked at GUSH. Huh? I'd have to do more research into this. But what do I think of it in the short term? Well, it looks like, nope. Well, it had a 2-day % B buy there, but I mean, until it really can prove itself above the rotation zone, it's just possible patterns to roll over it. It does not have a super strong bottoming formation yet. You might be looking for one because it's got some very key support down here. But this is just a short-term pop. Now, I'd be watching for the secondary pullback reaction to see how far that can pull back. But then if it can really get back through about 30.70, I'd be watching for pullback potential buy opportunities. But that would only take it to even this mid-32s. U.S. crude stocks are the lowest for past users this time of year. Thank you for putting that in. 4-hour crude double bottom trigger. Four-hour crude double bottom. I did not see one yesterday. I didn't have a double bottom yesterday. Huh. Oh, this? You mean this kind of pull? You mean this? This is just a mess going in here with this rising and this multiple thing down here. It's way too extended. So don't trade this as a double would be my recommendation. My targets, we can go over those tomorrow, but the first target I already covered. Hey, Coco, I brought you up yesterday. I said, Coco, come 20K. What else? XOP. Then I got to run. I got to take a look at the open price action. XOP is still. I mean, XOP is really before it's because it's triggered a major double top pattern. It's still got to get back above 136.40 before I get interested in anything but bounce plays. Because this could easily still keep rolling over, and it's against major. It's broken down against major resistance. All right, let me just peek at the open on here. Pulling back down, still holding the rotation zone. So this gave me a definitive line in the sand going into the open now to start watching this 49.12 area. React, so that's where I'll be watching in the short term. Going in, what did tick do on the open? Tick on the open, pretty strong gap. So we're getting lots of buying pressure into the open, but pretty quick reversals. Again, then you see the tick going down yesterday into the afternoon. Could not sustain anything, but that's what. So you don't want to repeat it yesterday where the tip kept falling, especially in the afternoon. You got the sell-off. So you want to see something at the higher end on any pullbacks. You want to see something. Otherwise, there's still potentially selling pressure in the S&P. So, and again, watch in the next 30 minutes to where it closes relative to this 49.1675. All right. With that, I will see everybody tomorrow for PCE Friday. Everyone have a wonderful day. Talk to you all later. Bye for now.